Hello, everybody. Today is the 6th of August 2010, and we're looking at a older day. It's the 20th of July intraday time frame, and it looks like a boring chart. You see three different lines, a green, a black, and a red. The green represents the highest point SLV traded for that day. The red represents the close or the lowest. The red the lowest, green the highest, and the black the close for the 10-minute time frame. But what's significant is its range, which is a top of 1722 and a bottom of 1706. And what I like about Fibonacci Upside is you take a particular range and then you do calculations for the difference of the range multiplied by 168 plus its bottom. So the math from 1722 to 1706 gets us 16 cents. And with the 16 cents, we can multiply that by 1618, and then the difference on 1706 would be a first Fibonacci level of 1732, which was an area you would expect to find resistance when it breaks this range, which it did. And then you would do 261.8 from the difference of 16 cents, and 42 on top of 1706 would give you a 1748 figure. Then you do 4.236, which is the next Fibonacci number. To calculate, you take its previous Fibonacci number, multiply it by 1.618, and that would give you its next Fibonacci level. There's the 4.236. And if we multiply this by its 16 cents, then that's going to give us 68 cents on top of 1706, which will be a little over 1780-ish. And I've done all the calculations on the spreadsheet, and this is, or 1770-ish, sorry. This is the Fibonacci that we are going to look at with a couple of VWAPs. So we look at this on this particular chart here. We can see that this first VWAP, the first one that I was supposed to get to, was resistance. For the range that I was talking about, this really exciting range was this bottom range in here. The previous resistance acted as support, and we've seen a lot of higher lows since then. There's this higher low, then we have this higher low, another higher low, another higher low, and then this was the last of the higher lows. Since then, it has ranged through time, but the Fibonacci, this baby here, was an area where it gapped up to, but it found resistance right at this 1770-ish area, 1775. It had a nice little retracement, broke through that level, and it has managed now to find resistance on three different occasions at this 1817-ish area. So it's had some nice areas of resistance at this time frame. But it's also been able to hold thus far a nice area of time consolidation. The support levels, the Fibonacci, the first one is the level from this one towards this one down here. Now we already know it's 1704 for a bottom and 1830 for a top, which is going to give you a total of $1.26. And we take this 26 and we multiply it by the first Fibonacci level of 38.2%. So a reduction of 48 cents from 1830 would be the next support level, which is roughly at about 1782, right where we found support. So it's already found support at its first Fibonacci level. Now from 1782 upwards to where we are here at about 1817, that works out to about 18. It's about 35 cents of a difference. So we'll multiply 35, and 382% on that is 13 cents. So the big area that you'd want to hold is 13 cents higher than this level here, which means this is the key area of support. Roughly at about 18, a huge area, and a little bit below it, 1796, 1797, as a massive level, because we've already came up and we haven't made a higher high on top of this level here. But we have come from this level and had a very nice gain. The question is, how much do you want to retrace? This looks like it's already retraced about 1/3, or its first Fibonacci level thus far. And a break towards this level means that we would be going towards the next resistance level. So we have this one, which is the 161.8. This was a 261. This was the 423. This works out to the 685. The next one's like an 1109. And when we look at this, we can move the scaling on this so that do it this way. We move the scaling to a top of 19, and that will give us the next Fibonacci level, which is actually 1883. So if we break out of this range, this is where it should be going, and this does match the previous highs within this range that we've been trading within. Because of where we are now, we are in an upward direction towards this range, and that's over the last week or so that we are in the upward range. I would like to thank you for watching this video and have yourself a magnificent day. Bye-bye.